Hey guys, hope you're all doing well and staying safe and healthy out there. Hey, we want to talk to you today about a topic that most people have seen in their everyday lives, but we've also been seeing more and more in the headlines, and that's a topic of inflation. So, inflation, the easiest way to think about it is when you have a currency that loses value over a certain amount of time. And what that means is it's losing purchasing power, right? And so the easiest way to see that is when you go out and buy everyday goods, if it seems like those prices you're paying for them is inflated, or you're paying a lot more for these everyday goods, that's usually a sign that you're in some type of inflationary environment, or that the economy is seeing inflation, right? So one thing that we saw more recently was just buying a stick of deodorant. This stick of deodorant was $8.29. Kind of crazy when you think about it. But another one we saw was 6 rolls of toilet paper, almost $12 at a local store here in Springfield. So it's just kind of crazy when you take a step back, because most people are going to buy those goods no matter what. Hopefully deodorant you're going to continue to buy no matter what the price is, and toilet paper. But it definitely is just one more sign that we're in this inflationary type of environment. A couple reasons for that. One, we've seen record fiscal policy. We've seen record monetary policy, and really record spending to kind of spend our way out of this pandemic that really, drastically affected our economy last February and March. And so when you see the economy begin to roar back, and in this situation kind of bounce off of those lows, that usually means you're in some type of inflationary environment. So that's not always a bad thing. What that really means is that the economy is growing, that rates are continuing to kind of tick up a little bit, and really that balance is a good thing. What you don't want to see is what's called runaway inflation. And so that means that rates are spiking, that the value of the dollar is tanking, and those drastic type of things are usually not very good for the stock market. So that's really what we don't want to see. All that said, we don't believe that at this point we're going to see those conditions anytime soon. And there's a couple reasons for that. One is what's called the Amazon effect. So if you think, most of us use Amazon, if not daily, maybe weekly, to buy some of our goods. When you go on Amazon, you have a variety of companies to choose from to purchase that good from. And what that means is those companies know that. And so they're going to try to keep their prices competitive to make sure that some of their products are being bought by someone. So that competitiveness between companies keeps the price of that product sustainable at a certain level, to where it doesn't inflate too much, which is great for the consumer, obviously. So one other thing to consider is that most companies these days have a good amount of technology, right, and more technology to be able to create the good that they sell to the retail consumer. And so the better the technology, the more efficient and the more the easier they're able to make that product, to be able to sell it to the consumer. And when you have that type of relationship, that means that they're able to charge a fair and good rate for that good. Another reason that we don't see the prices of goods inflating or spiking too drastically, which again would be another sign of runaway inflation. So all that said, we're pretty happy with the rate of growth that we've seen in our economy more recently. We want to continue on that path, and we think we will. We'll see around 3% GDP growth by the end of the year, hopefully. I think that's very doable, and we think that this current inflationary type of environment that we're in is a positive. You want to see some people out there spending, helping the economy grow, buying some products, getting some money out of their savings account and bank accounts. So that's a good thing. So if you guys have any questions at all or want to discuss that any further, feel free to give us a call or shoot us an email, or check out our website at bgwealthpartners.com. Thanks, guys.